Welcome to Wednesday morning's critical episode of Crypto Macro Insights. I'm Maya, and it's Wednesday, September 10th, 2025, 7 a.m. Eastern. Tom, we're now just 7 days away from the most anticipated FOMC meeting in recent memory, and Bitcoin continues its remarkable consolidation around $111,486. Holding steady after yesterday's brief dip to $111,486 from Monday's $111,549. Our monitoring of internet sentiment reveals fascinating contrarian signals. While mainstream voices increasingly call this period peak speculation and predict corrections, Bitcoin demonstrates textbook institutional accumulation patterns. Meanwhile, reverse repos ticked up slightly to $22.92 billion from yesterday's $19.42 billion, still representing an extraordinary 85% collapse from March levels. Tom, with producer price index data dropping today and consumer price index tomorrow, are we witnessing the calm before the storm that finally breaks Bitcoin toward our $125,000 plus targets?
Maya, the price action we're seeing is absolutely fascinating from a behavioral finance perspective. Bitcoin holding this tight $111,000 to $112,000 range, while internet voices increasingly call this peak crypto speculation, represents one of the most beautiful contrarian setups I've documented. The consolidation around $111,486 after a 42.7% 6-month run isn't weakness. It's textbook institutional absorption. What's remarkable is how stable this consolidation is occurring despite growing mainstream narrative that we're in a speculative bubble. When I see widespread internet discussions about Bitcoin being overvalued at these levels while the asset demonstrates perfect accumulation patterns, I know we're approaching the inflection point. Maya, this isn't distribution. Institutions aren't selling at $111,000 after driving it here from $78,544. This is final accumulation before the next leg higher, and the growing skepticism from retail voices only confirms the contrarian thesis.
The reverse repo facility showed a slight uptick yesterday to $22.92 billion from $19.42 billion. While still representing an 85% collapse from March, how do you interpret these daily fluctuations in the final liquidation phase?
Maya, these micro-movements in the final $20 to $25 billion are exactly what we'd expect in the terminal phase of this historic liquidation. When you're down to the last 2% of a facility that once held $2.5 trillion, daily fluctuations of $3 to $5 billion represent normal operational variations rather than trend reversals. Yesterday's uptick to $22.92 billion doesn't change the fundamental math. We've still deployed over $2.47 trillion since the peak, with institutions forced to find deployment destinations for this liquidity. The key insight is that these final movements are becoming increasingly volatile as money managers scramble to optimize yields ahead of next week's Fed cuts. Maya, when you're sitting on 4.3% reverse repo yields, and you know 50-plus basis point cuts are coming in 7 days, every day of delay is opportunity cost. These final fluctuations aren't signs of stabilization, they're signs of urgency. The last $20 to $25 billion will deploy faster and more violently than the previous $200 billion because the timeline for optimization is collapsing.
The internet discourse has notably shifted over the past 48 hours. We're seeing increasing discussions about peak speculation, warnings about crypto bubbles, and suggestions that smart money is rotating to safer assets. How do you interpret this narrative evolution?
Maya, this narrative shift is textbook late-cycle psychology and represents the most bullish signal we could ask for. When internet voices start discussing peak speculation, while Bitcoin consolidates at $111,486 after a 42.7% run, you're witnessing the exact moment when retail conviction wavers, but institutional accumulation accelerates. The smart money rotating to safety narrative is particularly ironic because the actual smart money, MicroStrategy, BlackRock ETFs, corporate treasuries, are doing the opposite. They're using this consolidation phase to accumulate while retail second-guesses the move. Maya, this is classic behavioral finance. Retail always gets nervous about bubbles exactly when the biggest opportunities emerge. The fact that internet sentiment is shifting bearish while Bitcoin holds perfectly above $111,000 suggests institutions are providing strong support. When retail voices start calling tops while the fundamentals remain overwhelmingly bullish. 85% reverse repo liquidation, upcoming Fed cuts, dollar weakness. You know the contrarian trade is about to pay off spectacularly.
We have a critical data cascade this week, producer price index today, consumer price index tomorrow, and then the Fed meeting next Wednesday. Given Friday's catastrophic employment data, how are you positioning for this sequence?
Maya, this week's data sequence represents the final confirmation before next Wednesday's historic FOMC decision. Today's PPI and tomorrow's CPI will determine whether the Fed has political cover for aggressive action. Given Friday's 22,000 NFP versus 160,000 expected, the Fed already has employment justification for 50-plus basis points. But inflation data below expectations would give them dual mandate coverage for potentially even larger cuts. My expectation, PPI and CPI both come in softer than expected, giving Powell maximum political cover for aggressive accommodation. This would trigger the final wave of reverse repo liquidation as institutions recognize that 4.3% yields are about to become 3.5% or lower. Maya, Bitcoin at $111,486 is perfectly positioned for this outcome. If inflation data confirms disinflationary trends while employment remains weak, we get the Goldilocks scenario. Maximum Fed accommodation without recession panic. This would likely trigger the breakout above $115,000 that launches us toward $125,000 to $135,000 targets as the final $20 billion in reverse repos seeks deployment destinations.
You've maintained the 7% allocation framework with the final 1% add prepared for the $115,000 break. Given this week's critical data sequence and the growing internet skepticism, are you adjusting the approach?
Maya, I'm maintaining the current framework, but with heightened conviction given the perfect setup we're documenting. 7% allocation remains, 5% core position plus 2% tactical add from last Friday. The final 1% remains prepared for the $115,000 breakout, which I now expect with 85% probability within 48 to 72 hours of tomorrow's CPI release. Here's why the conviction is strengthening. Bitcoin's consolidation at $111,486 during growing internet skepticism proves institutional support. The reverse repo math remains overwhelming with final liquidation imminent. This week's data cascade will likely provide Fed cover for maximum accommodation. And most importantly, internet sentiment shifting bearish while fundamentals remain historically bullish creates the ultimate contrarian setup. Maya, when retail voices call peak speculation, while institutions quietly accumulate and the Fed prepares emergency cuts, you position for the most explosive move in crypto history. The 8% maximum allocation triggered by $115,000 break represents asymmetric risk-reward positioning for what could be Bitcoin's final institutional adoption phase.
Tom, we've been documenting what feels like a historic inflection point over the past 3 days. With internet sentiment shifting bearish while Bitcoin demonstrates institutional accumulation patterns during the largest liquidity deployment in Fed history, how significant is this moment?
Maya, September 8th to 10th, 2025 will be remembered as the 3-day period when the most extreme monetary accommodation in modern history converged with peak retail skepticism and perfect institutional accumulation patterns. We're documenting the exact moment when narrative and reality completely diverged. Internet voices calling peak speculation, while Bitcoin consolidates perfectly after 42.7% 6-month gains. Institutions deploying the final $20+ billion in reverse repo liquidity, and the Fed preparing the most aggressive accommodation since 2008. This isn't just a trading opportunity. This is the documented transition from speculative asset to institutional reserve currency. Maya, when historians analyze crypto's evolution, they'll point to these 3 days as the moment when everything changed. The next 7 days through the FOMC meeting will complete this transition, but the setup is already perfect. We're not just positioned for profits. We're positioned for the greatest wealth transfer in modern market history as retail skepticism meets institutional FOMO during maximum monetary accommodation.
Extraordinary documentation, Tom. To summarize this critical Wednesday morning for our listeners, Bitcoin consolidates perfectly at $111,486, demonstrating institutional support after 42.7% six-month gains, while internet sentiment increasingly calls this peak speculation, creating the ultimate contrarian setup. Reverse repos ticked up slightly to $22.92 billion but remain 85% collapsed from March, with final liquidation dynamics accelerating as money managers face 7-day deadline before Fed cuts. Critical data cascade this week: producer price index today, consumer price index tomorrow, setting stage for historic FOMC decision next Wednesday. Current positioning: 7% allocation, 5% core plus 2% tactical, with final 1% prepared for $115,000 breakout targeting $125,000 to $135,000. Key insight: internet voices calling peak speculation while institutions accumulate during largest liquidity deployment in Fed history represents the most extreme contrarian opportunity in modern market history. September 8th to 10th, 2025, the 3 days we documented peak narrative divergence ahead of crypto's final institutional adoption phase. The setup is perfect, the math is overwhelming, and the opportunity is generational. Next 7 days will complete the transition from speculative asset to institutional reserve currency. Position accordingly, maintain discipline, and prepare for what may be the most explosive wealth transfer in modern financial history.